Good afternoon, everyone, and welcome to this APM webinar on how to ensure effective project performance reporting. I'm Ewan Glen, a committee member of the APM Planning, Monitoring, Control Specific Interest Group, and with me today I've got Iain Morton and Dave Llewellyn of BMT HiQ Sigma, who will be delivering the webinar. Before we start, just a quick SIG introduction and some housekeeping. Planning, Monitoring, Control SIG is one of the most prolific specific interest groups within the APM. We were formed out of the planning and the earned value management SIGs back in 2012 and are heavily involved in a number of activities covering such as knowledge sharing, developing publications and establishing thought leadership in areas of interest to the community. In addition to activities such as this webinar, current activities are in areas such as working groups looking at establishing controls for agile project environments, guidance on how to scale project controls to make them appropriate to your project environment, and wider things like that. If you want to be involved in the SIG, just use the SIG email address that was on the first slide. And some wider housekeeping. So if you can please be aware that this webinar is being recorded and you're in listen-only mode. So if you do wish to participate with the content, what you can do is write questions in the questions area of your dashboard, and we'll answer them at the end of the webinar. After the webinar has finished, later today you'll receive an email providing links for the APM webinar recording loaded onto our APM YouTube account, and for the slides loaded onto the APM SlideShare account, both of which will be listed in the SIG micro site page on the APM website. The email will also include a feedback survey link, and we do ask that if you're able to in the next couple of weeks, follow this link and provide feedback on the webinar to improve them in the future. CPD certificates are not issued for webinars, therefore delegates should self-assess on the CPD records. And with that, I will hand over to Iain and David to introduce themselves.
Good afternoon, everyone, and thank you for joining us on this webinar this afternoon. It should take about 30 to 40 minutes, which will leave us plenty of time at the end for questions. So as Ewan has already said, please do fire them in, and we'll make sure we cover them at the end. So just a very quick introduction to ourselves. So my name's Iain Morton, and later you'll hear from David Llewellyn. And we work for BMT HiQ Sigma, which is a management consultancy which is supporting clients in the energy, defence, transport and other government department sectors. We provide services to portfolios, programs and projects, and specialise in P3 management, P3 controls and systems engineering. David and I have both been working with the Ministry of Defence and supporting the rollout of project controls over the last 3 years, specifically within the fleet domain, with a particular focus on implementing a consistent and coherent performance reporting framework across all of the projects and programs in that fleet domain. And it's from this experience that we bring many of the points to you today. So to just set the scene, this is how we see the performance management process. You have to start off with the foundations in place, and quite simply we mean the performance measurement baseline. You need to have a baseline schedule in place to understand the activities required to deliver your outputs, the resources required. You need to have a clear risk register to understand what could impact you. You have to understand the budget from a cost perspective that you're operating against and any potential dependencies that you have across the wider program. Without those foundations in place, you won't be able to truly measure the performance of your project. So once you've got those foundations in place, you then need to capture the data as you go through your performance measurement life cycle. So looking at the schedule that you've got, capture the data of the risk register. You then need to analyze that data, so you actually need to do something with it. Once you've analyzed that data, provided some thoughts, then you need to publish the report. So this can be the form of a dashboard or a management board pack. Once those reports are produced, you then need to review those reports and ultimately take action on that. And predominantly what we're going to talk about today are the first 3 steps, because it's our view that if you get the first 3 steps right, it makes the final 2 steps a lot more effective. So we're going to talk about 3 key and very easy rules that you should apply to any project, program or portfolio. And quite simply, they are a case of only collecting the data that you require. Once you've collected that data, making sure that you do something with it and analysing it. And then finally, presenting that data clearly. Now, you may be thinking that this is very basic or noddy, but in our experience, it's astounding how many people fall into the traps with each of these steps. So we intend to go briefly through each of the steps in turn and provide the things to look out for when you're looking at each of them. So the first stage, the data collection stage, everybody loves data. We live in a data-rich environment. It's told what we're told to thrive on it. Give me the data, and rightfully so, because through project controls data, we can really understand how the project is performing and where the pinch points are and where we need to put our focus. But in my experience, we've got to the point of data overload where we spend the time to collect the data, but we don't actually know what to do with it or quite simply why we're collecting it. Just the other month, a project controller I was working with came up to me and said, Ian, I've got it. I've been asking for months, and finally I've got the earned value report from my supplier. And he asked me to have a look at it. And of the 10-page report, he only needed the first 2 pages because the other 8 pages were forms of earned value management they just were not going to use and were absolutely useless to them. So I put the question back to him and said, why did you ask for all of this information? And the response was, well, I've heard that earned value is a good thing, and I just feel really good that I've got some information and data out of the supplier. And I think there's a perfect example of somebody that knows that they should collect data, but don't actually realize or know why they are collecting it. So that is what you've got to be asking yourself in any stage of the project, whether it's at the initiation phase, whether you're designing your manufacturing or whether you're closing it down, is quite simply, why are you collecting the data? Because if you can't answer that question, then you've got to be considering whether you do actually collect it. And there are many reasons why we should be collecting data, because it can be very effective at informing our stakeholders on how a project is performing. And likewise, our program or portfolio managers can use the data to hold to account and exert control over how a project is performing, to genuinely see how the performance there. It's very good for driving continuous improvements, particularly if you're working in that sort of environment where you can see your efficiencies of production, but you can also manage the interdependencies across your projects with data. And there's probably many of you listening here that collect data because you have to, from an accreditation perspective. But what you've got to consider is why are you collecting it, and make sure that it links and supports the strategic key performance indicators, because ultimately that is what we are all striving towards. That's what our projects and programs are striving towards, is our corporate objectives. So if you cannot see the link between what you're collecting and the overall output, then don't collect it. Because that's quite simply where I see it, is if you don't use it, don't collect it. I could bore you all with tons of examples I've seen of where time and effort has been spent creating data for no one to actually look at it. But a favorite of mine is where a team every month would produce 8 A3 pages of data that would be reviewed by a program director in a half-hour meeting. Now, to me, that seems utterly ludicrous, because there's no way that program director is going to have the time to look at all of that data and understand, well, where should I apply the effort? Where are the pinch points? What's the issues that I need to deal with? What they should be doing is taking all of that data and pulling it together into a clear and consistent format that is easy to review and tells the program director what they need to actually deal with. It takes time to collect data, so if you don't use it, don't collect it. And really, at the end of the day, a lot of it boils down to money. If I take you over to the supplier-customer relationship, I've worked on both sides, and I remember when I was the supplier and the customer wanted more data, really we would try and charge them for it. It's generally how commercial organisations work. If I'm the supplier and I'm being asked by my customer to provide more data that I've not got readily available, then I need to work out, well, how are we going to collect that data? Who's going to collect it? Who's going to analyse it? Who's going to review it? Who's going to approve it? What format does it need to be submitted to the customer? And that is all time and effort that I need to add. And again, quite simply, somebody needs to pay for that. So if you're a customer right now and are demanding more and more data from your suppliers, just keep that in the back of your mind, because nothing comes for free, and if you're not really going to utilize it, then why are you asking it for it? And even if you do get it for free, from a goodwill perspective, again, if you're not actually utilizing that data, then the time that's being spent by the supplier to, again, collect that data, review it, approve it, submit it to you, is time that they could be spending on things that you perhaps care a lot more about, such as delivering the product or service that you've contracted them for. So, and I bet there's a lot of people on this webinar who sat there reading a request for proposal and thought, why are they asking for that? Well, the customer should be doing that beforehand, rather than thinking, let's try and get everything out of the supplier. I'm not saying don't collect data. What I am saying is you've just got to make sure you collect the right data and consider the implications or the cost if you are asking for it. You've collected the data, what do you actually do with it? You've got to make sure you do something with it, because if you don't, then what's the point in collecting it? And for me, the key thing is data analysis. You need to actually look at that and apply some thought. Data can tell you how you're performing against your baseline, but it doesn't tell you any true causes for any variance. It doesn't tell you what the critical tasks that need urgent action on, or the potential impacts on other projects. It's with analysis that you can really understand this and actually apply the thoughts. And it's something that I've seen is with people collecting data, but they then don't know what they should do with it and don't actually apply the thought to turn that data into management intelligence. In my opinion, analyzed data is actually better than real-time data, because some actual thought has been applied to it. And I was having this debate the other day with a colleague, and I made this point to them that analyzed data is more effective than real-time data, and they slightly contested that and said that, well, it doesn't apply to every organization. They use the example of Amazon, where if they're bringing out a new product, they would quite simply want to know, well, how much are they selling? And my view is, well, yes, that's useful information, that's useful data, but with more analysis, you can understand, well, what day are they selling more of that product, or what geographical area are they selling more, and perhaps even what time of day are they selling more. And with that analyzed data, they can then use that in turn to manage that product going forward, but also manage future product launches. And that's where I think data analysis is a lot more effective than real-time data. But you've got to, quite simply, make time for it in your performance drumbeat. It sounds, again, very simple, but I've seen it where projects strive so much for real-time data that they will just take the raw data out of their tool sets and never actually look at it, apply some thought and analyze it. And that's where you have to make time for it in your performance drumbeat, which of course does mean that it makes the performance drumbeat slightly longer, and it also means that it takes longer for the data to perhaps get to your project manager or your program manager. But again, my view is that when the information gets to the project manager, it's a lot more valuable, because you'll have had experts that have reviewed it, analyzed it, to understand what they need to know and what action needs to be taken forward. And quite often when I've had this discussion with program managers or portfolio managers, the response I do get is, this takes far too long to get to me. The data is far too old. And I can understand that. But at the same time, I have the view that your portfolio and program managers should be thinking a lot more strategic and thinking at the higher level. The detail of project technical issues should be managed at the project review or by the project manager. As you go through the P3 hierarchy, you need to consider the data that is being presented. It's not quite as simple as, let's take the data that's reviewed at the project review and just copy and paste it up to the program and then up to the management board, because then the management board they'll have far too much data to review. What's a lot more effective is to bring that together and actually consider, what is the key issues that need to be dealt with by the program manager? Are there any risks that are impacting across the project? And that's why you have to make time for your analysis, but also consider how the analysis changes as you go through the P3 hierarchy. Because for me, analysis is the true value of project controls. It's fairly simple to pull together a schedule and to create a risk register, but where the real value comes is by actually analysing those tool sets. Because your tool sets give you the data, but really it's the human that turns it into management information. Now, program offices are becoming very common, and rightfully so. They certainly have a place in a lot of our programs because they can be very effective. But you have to be sure that you're getting value out of them. Because I've seen it before where program offices are copying figures and dates out of numerous project dashboards and then quite simply pasting them on a program dashboard. Now, to me, I don't really see where the value add is there. You know, the program office, what they should be doing is applying that thought and that programmatic analysis to understand, well, are there any impact project X if it's going to be impact project Y? Is there any slippage that's going to have any impact? Likewise, are there any risks that need to be aggregated and managed at the program level? That's really the value of the program office, not simply pulling together data and putting it on a dashboard. So again, right now, if that's what you're getting from your program office, it's just simply copying and pasting data, then I would question the true value of what you're getting, because again, it all costs money implementing such a factor. Because, like I say, for me, analysis tells the full story. A schedule can tell you how you're performing against your dates. You know, a cost tool can tell you how you're performing against your budget. Risk register can tell you what could impact you in the future. But they're very silo, and they will think about the specific factors. But without applying the human factor in the analysis, you can actually truly understand the full story of how your project is performing. So once you've collected the data, you've analysed it and turned it into management intelligence, and you've got to make sure you then present it clearly, because really this is where the decisions are made. You know, if you do the first two steps right and then fail on the last step, then all of that initial work could be absolutely wasted, because this is really where the program managers are making the decision. And everybody loves a dashboard, and whether you're using a WYSI tool that costs thousands of pounds, or if you're simply using Excel or PowerPoint, they can be extremely effective for presenting data. And what, you know, why do we need them? There's many reasons for it, because they do inform management on how the project is performing, and it allows those program managers or senior leaders to make more informed decisions, because they're making their decisions based on the data and the analysis that's come from the team. It provides that confidence and assurance to the senior leadership that the project is under control, and they can use the dashboard to balance that whole to account as well as resolving issues, because the dashboard should also be used as a form of escalation. It's not just a snapshot in time, this is how we're performing. It should also be used to escalate any key issues or risks that we need help with. We need help from the senior leadership team. And the dashboard is a great place for keeping all of the information in one place. But I often get asked the question, you know, what is the perfect dashboard? And personally, I don't think it exists, because it entirely depends on what your organization is trying to achieve. I can give you a template on what I think is useful from a dashboard perspective, but at the end of the day, it needs to be tailored. So actually, what are you wanting to understand from how your projects and how your programs are performing? But once you've got a dashboard, I'd urge you all to keep the format consistent. Again, it's very common where actually we all go off and create our own dashboards because we like a certain way of how it looks. But imagine if you're a program director and you have to review 6 project dashboards, and if they look and feel different completely, then they're going to spend time trying to work out, well, where's the milestone information, where's my cost information, where's my escalated risks? And that, again, might sound fairly trivial, but this is time that's, you know, precious time that is wasted when they could be spending it thinking about the issues that really matter. And I'd also look at it from a project controller's perspective. You know, if the requirements of what needs to be in a dashboard is changing on on a life cycle basis. So if your performance drumbeat is on a monthly basis, and if every month you're changing what is required to go into the dashboard, then your project controls team need to work out, again, well, how do we collect that data? Who's collecting it? Who's analysing it? How's it getting reviewed by the project manager? And that's all extra effort. If you keep the format consistent, then they will know exactly what they've got to do at this exact time each month. And it will be a lot more of a well-oiled machine, really. But I would focus as well on, you've got to make sure you present by exception. And, in my view, if something's on the dashboard, we need to talk about it. If it's on there and we don't need to talk about it, what's the point in it being on there? You have to consider the so what. Why do we need to present this data? Another team I work with, they used to receive a 70-page report every month from the supplier, and they had to review that in a day-long program review. And every single month, they would only ever get through about 40 pages. And again, I think there's a perfect example where there's just so much data. Do you really need 70 pages worth every month to understand how a program or a supplier is performing? Surely it's better to create a lot more concise report to bring out the things that really matter. And those 30 pages that aren't being reviewed, again, like I said earlier, that's effort that's being spent by the supplier that is just wasted. And again, I bet that they were charging the customer for that. And really, a pet peeve of mine in particular is top 10 risks. It's something I've often seen in program reviews, management boards, is we get to the risk section, the top 10 risks fly up onto the screen, everyone looks at the screen, and then everyone 30 seconds later goes, okay, move on. And I come back to my point, well, what's the point in it being on there if we're not going to talk about it? My view is that we should have on the dashboard the risks that are there to be escalated. This risk is so severe, I cannot manage it at my level. I need your help, Mr. or Mrs. Program Manager. Therefore, I'm escalating it to make you aware so that you can deal with this. Or this risk is so severe that it could impact the wider program. We will continue to manage it, but you need to be aware, Program Manager, because this could impact more of your projects. Then let's talk about what is the potential impact and what are we doing about it, so that we actually have a real focus. And you have to think about the feedback loop. As you go through your performance drumbeat, it's not all about escalating issues, risks, or talking about the data in the past. You should be feeding back, the senior leaders should be feeding back the decisions that have been made, and feeding that back to the team, and perhaps understanding why has a certain decision been made and what is the action going forward. Because the team have done all of this work to pull together the data, analyze it, understand what needs to be discussed at a program or a portfolio board. They need to understand what was the result of that. But you've got to focus as well on the quality of the content and not just the quality of the presentation. I've talked about the quality of the presentation, and that is certainly key. But my point here is that if you spend all of your time focusing on creating pretty pictures or pretty graphs, rather than actually analyzing the data and thinking about what is this really telling us, then you're going to lose out. I've seen, again, a lot of organizations spend thousands on dashboard tools, and they can be very effective and powerful, and they make it look extremely professional and wizzy. But ultimately, if the data that feeds those tools is useless, then that's just money wasted. So if you're implementing a tool like that, if you're in a change program that has that, then I'd ask that question. This tool is going to look fantastic, but ultimately, how effective and how powerful is the underlying data that supports that? So those are the three key rules that we tend to apply in all of our work that we go forward. And I'm just going to hand over to David Llewellyn now, who's going to take us through how we applied these three rules into a recent case study.
Hi there. So we were supporting, or are supporting, the MOD's Defence Equipment and Support Organisation's transformation programme, which has stood standing up 11 functions and their new ways of working. So what we were doing was supporting the maritime domain to implement best practice project controls, initially included project management. We were establishing a performance management framework to work effectively alongside their new project controls practices. And we were coaching and training their project controllers and leaders in new ways of working. So how did we collect the required data? So firstly, it was all about having a robust performance measurement baseline. So this was about coaching and training our project controllers and project management staff to ensure that their project controls artifacts are fit for purpose and follow best practice. We were then asking and finding answers to key questions and then implementing our new approach. Things like that Ewan was touching on. Do you need this data? Is the data that you're receiving appropriate? What aren't you getting to support decision making that we could improve upon? We're then trying to understand the as-is and the to-be in terms of performance management. So it's really important to understand the unique reporting requirements that this organisation faced, whilst also considering the artefacts that had already been developed as long as people can remember and are still being produced because that's what they've always done. Obtaining buy-in from senior leadership and then understanding what they'll need to make decisions, not necessarily what they think the output will look like, was really key to develop this framework. Next was looking at making sure we have the correct ownership of this management information. Ensuring that the PMs own their MI was imperative to ensure effective performance reporting and analysis. Initially, our project managers were asking their project controllers to present this MI in their various boards and meetings. However, sitting in on these meetings, trying to coach these leaders and these project managers on how to effectively report the progress and then how their leaders can elicit the information that they weren't getting. Representing and reporting on supplier performance appropriately. So the D&S places and manages lots of high value and complex projects. Once those contracts have been placed, the D&S staff monitor contract performance. So, well, we're currently working with the project teams to try and get their capital expenditure activity appropriately represented within their PMB at a suitable level. This will hopefully allow the teams to monitor the performance of the key outputs and work streams rather than just, as Iain said earlier, review and receive and review a mass of project controls data that may mask poor performance. Previously, this capital expenditure scope was not incorporated in their PMB, so they weren't able to identify scope creep and suitably control their contractors. They were just using the data that was received rather than analysing it themselves. So next on how we're helping them analyse the data. So firstly, it was about developing the governance structure and the MI flow. So establishing those key meetings across the P3M spectrum, developing terms of reference and tailoring the inputs and outputs and the purposes of those meetings accordingly, and making sure that everyone's aware that needs to be. Then providing guidance on the MI that we're expecting to be presented through this various governance chain. The next, an example is where we developed an own value engine, which was an interim EV solution whilst a corporate solution was investigated. So this was looking at common structure and format for EV reporting that docs with the existing tool sets, data and processes, and then providing coaching on the EV analysis side to use this data with our project controllers and making sure that awareness sessions were provided to those leaders and the people that would be receiving the information. The key message here was consistency of MI following standard reports and making sure that anyone that touches these reports knows what they're looking at and how to review it. Next was utilising our P3 offices. So within the domain, we're trying to make sure that they add value. To do this, we tried to develop a common program office construct to understand the inputs, outputs, dependencies, the mix of skills and experience within that office required to support the projects producing that MI. We work with the portfolio offices to develop things like integrated master schedules, minimum reporting requirements, and coaching on the types of MI that we should be seeing at these senior levels. Focus was trying to understand the impacts on the portfolio or program rather than individual project outcomes. Next was looking at management information tailored to the different types of work that they did. So examples being they have big acquisition contracts, some projects that are all about letting contracts, and then finally in-service support where it's more contract management. So it's making sure that it was structured to the right level. The organisation has mandated that all work must be measured using EVM. So we tried to tailor this so that the key project information was structured at suitable levels with due attention and reporting applied, whereas more of these business as usual type activities, such as managing contracts, captured as level of effort and reported at a high level so that we can more usefully track industry performance using EV, KPIs and other metrics that are pertinent to their scope. We also have to consider some other factors. So the cost of the scope, the complexity, whether the scope is internal or external. So making sure we tailored this and take a pragmatic approach to reporting was really key to demonstrating the benefits of an effective performance management framework. So next, looking at making sure that they present their data clearly. So as Iain talked about, we generated a clear and concise dashboard template, which involved speaking to lots of individuals as well as teams to make sure that we're trying to elicit the right information to make decisions. We rolled this out across all projects within the domain with a focus on maintaining consistency. However, they could tailor slightly, as every project has its slight nuances, but the information presented is generally in the same format. The dashboard consisted of MI such as escalated risks and issues, milestones data, cost performance, resourcing, EV reports, staffing plans, and making sure that those are common across the board. We tried to get the projects not only to think about the now, but also the future to make sure that MI is useful. Next, we're looking at emphasizing the reporting by exception and utilizing those PMB artifacts that we have. So we're trying to get rid of that top 10 risks concept that was entrenched in almost every project. They generally see it as they have to populate the dashboard because there's gaps left in the table. Now they're starting to realize the value of their project controls artifacts because they can see how they can use it. And they're starting to understand that capturing project information is not the same as managing it. We're trying to implement an escalation route where risks and issues are only escalated if management intervention is required, or that they're so severe that they're going to affect the wider program or portfolio. And trying to introduce the concept that there needs to be a pyramid of milestones, where the detailed project milestones are kept for project reviews, and as we progress up the pyramid in program portfolio space, only the strategic ones are presented, reviewed, and fed back on. Next, we were looking at all the P3 levels to encourage this create once, use many times rule to minimize the number of ad hoc reports that we have. So teams right across the domain will always be asked for ad hoc reports from various different customers and stakeholders. So we're trying to encourage and manage to successfully, in some teams, transition their ways of working to make sure that they use the same dashboard and the same MI across all of their performance reporting lines. So this is obviously going to reduce the effort placed on those teams to create more and more reports. We're still working on some of the other teams. Educating teams on the impact of changing reporting requirements. So in a similar vein, we're working with the program and the portfolio officers to make them aware of the impact of changing these reporting requirements. If it changes, the teams are going to have to work out how they're going to collect the data, what they're going to do with it, who needs to approve it, how they'll present it, which is all effort, additional effort that we're trying to eradicate. Next point is about delivering executive performance management training to 150 leaders across the domain. So making sure that they're aware of what we're trying to implement and put the emphasis on their own behaviors to make sure that they understand their part in this process. Generally well received because they're starting to understand what they could get from this information and how they could use it. And finally, coaching those leaders in the various project and program reviews. So sitting in, making sure that they understand what the MI means and that the analysis has been done before the review so that we could discuss it rather than critique it in the meeting. So in summary, just to pick up on Iain's points at the start, so making sure that we only collect the required data. So asking ourselves why we're collecting it. If you're not using it, then don't collect it. And remember, everything costs. Analyzing it. So make time for it in your performance management drumbeat. Consider the hierarchy. Make sure that your program portfolio officers truly add value and aren't just a copy and paste function. Remember that analysis tells that story. And then keep the format consistent. Present by exception. Ask the so what if you're someone receiving that information. And question the content, not just the presentation. Thanks very much for listening, everyone. We produced some white papers that go into some more detail, which are on our HiQ Sigma website if you'd like to have a look. And thanks again. Open to any questions.
Okay, thanks, Steve and Iain. That was very informative. Hopefully giving everyone some ideas so they can maybe apply in their projects. We've got a few questions, so I will start at the top. So first question from Simon from the project perspective, there often seems to be one set of data analysis needed to manage the project and a completely different set requested for the programme review level. Any thoughts on better aligning these so that projects collect and analyse one, not two sets of data?
I think I was touching on that before, that getting in at the programme portfolio offices is key for that, making sure that you're consistent across the board, understanding the principles and the requirements early on, and making those programme offices who should have some authority mandate the format and the structure that we should be reporting on.
Yeah, I think the only thing I would say with that is just also ensuring that you've got a status date that the entire program works to, and the data stays the same as it goes through the performance reviews. It's just the differing form of analysis that happens as you go through the hierarchy. If you've got that clear structure in place, then everybody should know what they are doing as you go through the life cycle.
Yeah, thank you. Next question then from Christine. Shall we not be aiming for both quality of content and presentation rather than choosing one or the other?
Yeah, I completely agree. Yeah, you're totally right, Christine. We should certainly be aiming for that. I think the point really is trying to make is that, in my view, is that the quality of content is more important than the quality of the presentation. So if you're struggling for time, I would rather spend the time analysing the data to see what it's telling me, rather than spending the time creating a pie chart, for example.
And the initial effort should be up front. You should understand, again, the themes, what you're trying to present, and then once you find out those initial creases, it should just be about turning the handle rather than creating a new or pretty picture every month.
Yeah, I think that answers the question. A question from Prabha. Are there any common themes that cropped up as you worked with senior stakeholders to develop the dashboard, e.g. how risks are presented and discussed?
I'd say the common theme that I saw was that every leader wanted to see something different, which of course is not helpful for projects. So where I was saying earlier about keeping it consistent, it's ideal if you can try and do that across your entire company. From specifically looking at the risks element, I've seen it before where some people like to see heat maps of where they want to, where is there potentially more risk across my program or any specific projects. I also tend to see where people just want to know, what are the risks that I need to know about now? What have I actually got to do? Because these are people that tend to be in a lot of meetings. They've not got a lot of time to work out what they're trying to understand in front of them. So it needs to be clear, and they need to understand, well, what do you want my help with? What is so important that so that's where I come with the top 10 risks. Is personally, I think it's more important to put up what you need to talk about, and generally the response has been quite receptive to that, rather than just focusing on top 10 risks.
Yeah, I guess to support that, the focus should be on capturing the right level of detail for that risk in this example. Because as I say, these guys are in lots of meetings and they're not going to have time to read a 2-page report on why this risk is so important. You need to be obviously supported by a narrative in the board or meeting they presented in, trying to strike that balance.
Yeah, thanks for that. From Campbell, what value do you see that a PMO can bring to a project or portfolio instead of just repeating the same information?
I think you need to have true analysts in there and experts in what they do, not just people that can jockey some of these tool sets. They need to understand the principles of, well, in this case, project controls, but it depends what they're interacting with, and they need to have experience.
Yeah, I think that's the real value is actually them analysing it, looking at the data that's coming up to the programme or portfolio office, rather than just taking that and just copying it, is actually analysing it themselves. And they're the ones, if you think about the project controller, they don't have the view of the program. So they will solely look at how the project is performing. The program office are the only team that will have the true picture across the entire program. So they are the ones that need to look at what is the potential impact across all of these projects. A
question from David. In DNS, did you experience a reluctance to report red on dashboards as it might be interpreted as a failure?
I think we have a real mixed bag. Definitely that occurs. And the other way is some of the leaders aren't too fussed whether they see red and aren't looking for a return to green actions. So it's a real challenge to try and get the, and I'm not saying we've succeeded by any stretch, but get the projects and throughout the chain to make sure that they're reporting accurately. And there's nothing wrong with red as long as we focus on the return to green actions or the explanation as to why it's outside of our control. And likewise, working in this executives training that we've delivered and other bits of coaching, making sure that the leaders don't scare their project managers into reporting red, and then they work with them to rectify.
Yeah, I think that to me, I think that's the key point for me with that one is around the behavioural piece. Is often people don't put red on there because just simply because of the culture or the behaviours that is operating across the programme, and that's something that we have been trying to do is to coach people into accepting red on a dashboard. You know, what isn't acceptable is, of course, if red is on a dashboard and it's not understood. If you don't put red on a dashboard until it actually hits you, then of course you've got no time to deal with it. And that's something that we certainly strive for and push is to actually just be open and honest and get that culture of trust across the entire programme.
Yeah. Possibly following on from that question from Jane, do you have any thoughts on the best way to make the case for real analysts to skeptics who just want admin from a PMO?
I think personally, if you're going to put a case forward, you have to show the benefits of it and actually show what a true analyst can do and show the project manager what information they can have. We've tackled that a lot where people, project or program managers have not seen the value in project controls, but until they actually see the information in front of them and actually understand, okay, this is what it can tell me. Okay, now I truly understand the value of it, and that is actually the best case for bringing in an analyst. I think is actually trying to show the value.
And when you get this at the higher boards, the information that these leaders are receiving, do they critique it and do they discuss it and evaluate it themselves? In which case, they're sort of undermining the analysis that's being done beforehand. Or are they expecting that analysis to be done and they want to take a truly portfolio program level view, in which case I think definitely they can add value. You obviously need to consider the size, complexity and all the rest of it when considering whether you need a full-blown program office as to whether it's appropriate or whether your projects can feed that information and you can trust them to report by exception.
Yeah. And I think following on from that question, a bit of a tricky one, from Michael, what level of effort should be planned, budgeted by a project team manager for the team to maintain the MI?
So the amount of the actual amount of is it as detailed as that? So to be honest, I think it's not the answer you're going to be looking for, Michael, but I think it's entirely dependent on the size and the complexity of the project.
How we tackled it in DNS was we've developed a project controller's drumbeat. So in the first half of the month is about obtaining the information and statusing your project to make sure that your artifacts are correct. And in the second half of the month, it's about the analysis piece, the reporting piece, and supporting that. And that was because of the sheer volume and complexity of the project, that was appropriate. If you had lots of smaller projects and not as complex, then you would obviously compress that timeline, maybe spread your project controllers and performance analysts across a wider range of projects and give it less attention because of those influences.
Yeah, thanks. We'll do the last couple of questions. Question from Darrow on opportunities, and I think summarising the question, would opportunities have a space on the dashboard?
Definitely.
Yeah, definitely.
When we say risks, we mean threats and opportunities. Obviously, flip the impacts. We're trying to maximise the impacts, but yeah, we use the term for both.
Yeah. Okay, so I think last question, just to try to wrap it up. possibly a bit of a technical question, but as we mentioned it in the presentation, so from Samuel, what is the definition of an earned value engine? What does it include? What does it bring data in from, I guess, is the summary?
So the one we created was quite simply in Excel, and it was pulling the data that was from the Microsoft project schedule, and it was the tool set that they were using in DNS. And ultimately, we created a number of formulas that would tell us, from a schedule performance indicator perspective, how the project is performing. But then they also had their cost accounting tool set, and we physically took the data from there and pulled it into Excel. As we said, it was an interim measure, but it did allow the projects to measure how they were performing. So very simply, it was created in Excel and it was pulled. The data came from Microsoft Project and also from their cost accounting tool set.
And it auto-populated CPRs 1 and 5, and it was at this point we were introducing EV to a lot of our project controllers in DNS. So it was really helpful for them to understand the EV report and the VAR explanations that would be useful, the variance analysis report explanations that are valid and that are useful for their leaders. Yeah, so it's an interim measure. Now they've adopted P6 and they're starting to automate that process.
Okay, thank you both. There's a few more questions have come in, so what we'll try to do is write up a brief answer, and then I think we'll send that out along with the feedback report later on if we can manage that. I mean, to point out as well, there was a couple of suggestions made by people through the questions. David suggested that on the dashboard put in takeaways that management wants to sort of, I guess, get from that dashboard, and that's probably quite a good idea. And Neil as well put one on there about making sure we highlight month-on-month data so we can start to show the trends, which again is another very good idea.
Yep.
We probably support both of them. So I guess to wrap up, thanks again to Dave and Ian. I think we've done an excellent little webinar. Hope you have all enjoyed it. From the Planning Monitoring Control SIG, as I said, if you want to get involved, send an email to the address at the start of this presentation. Our next event is actually tomorrow in North Bristol at the BAWA, an Agile Project Management Seminar. I don't know if anyone's going to that. And I guess thanks for listening. We'll send the slides out hopefully in the next week or so. So thank you all very much.
Thank you.